Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Monday, March 31st, 2014. Markets are in rally mode today, although in all fairness, since the opening gap up and small push, we're basically in a range now. You can see the markets moved up into resistance, pulled back into resistance, pulled back, and now we're kind of just in the mid-level right now. A couple things to note here. Number one, the resistance point right here is actually very significant. If I zoom out on this chart, you can see exactly what I'm talking about here. Let's just take a look here and zoom out on that. And sure enough, notice this trend line here sloping through. And again, that is a very important level at this point in time. So a good little level of resistance. And again, if I go to the larger time frame, you can see it a little bit better on the 60-minute chart. There it is. So connecting this pivot high to this pivot high gives you this general vicinity here, and then also this general vicinity right here, and that's where the market seemed to be stalling out. If we were to break above this area and close above it today, you would see upside potential to this area around the 188 level, and there is a small chance you could go as high as 189 and change back to the 52-week highs on the SPY. So just be aware on that factor. Definitely something we want to pay attention to in the short term. Now, the volume on this market on this Monday is minuscule. I mean, it is about as quiet as it can be. We only have traded 61.8 million at this point in time, and it's already 2:30 p.m. Eastern time. So we're probably on pace for about 90 million on the SPY. Now, there are certain stocks outperforming today, and the stocks that are outperforming today are definitely in the realm of the Dow stocks, even the Nasdaq today. I mean, the Nasdaq's having a decent day, up about 1%, but it's not having a sharp bounce back like you would expect, considering some of the hammerings that certain stocks took last week and the previous week. And just to give you a good example of that, take a look at Netflix today. Netflix here down still $5.70, just coming off its lows. So a lot of the NASDAQ stocks, yes, the NASDAQ's up about 1% today, which isn't a bad move at all. But it's, considering the beatdown that certain stocks like Tesla, Netflix, and Priceline and some of these other ones have taken, you would expect a sharper bounce when the market's getting a bounce. So we're still seeing a little bit of tentative nature in regards to buying the higher risk, bigger beta stocks. And remember, beta stocks mean they're volatile. They go up a lot, but then also they can fall a lot. For instance, Priceline, same thing. Priceline's up today, but look at Priceline, only up about $6. That's a pretty weak showing, considering if you go to the daily chart on Priceline, look at this. I mean, Priceline's down from $375 right now to about 11.95, 11.97. That's still a huge move, and considering the market's now bounced Friday, which it bounced up a little bit, and then today, which is a pretty solid bounce, look at the minor bounce you've seen at best on Priceline. So what this tells me is that there's still kind of that underlying, nature where people are concerned that the markets may have more declines in the not too distant future. And again, they're still willing to go into stocks like IBM. If we look at IBM here, look at IBM. I mean, recently this thing has been an all-star. Had a little bit of a pullback last Wednesday and Thursday before bouncing back Friday and today. But either way, that's just an amazing move compared to the Priceline chart or the Netflix chart or the Tesla chart, and things are much, much different. Speaking of Tesla, let's take a look. Look at Tesla, guys. So again, this is exactly why you got to understand the driving forces behind the Nasdaq, the Dow, the S&P, and Tesla today down $4. And honestly, you might say, well, where are you looking to buy Tesla? I mean, what's your level? What's your entry price on Tesla? And I'm going to give it to you right now, guys. Your entry price on Tesla is going to be, let me just zoom out here. Let's see, right in this vicinity, right in here. All right, this is your area. And the 200 is going to creep up there as well to get very close. So somewhere in the vicinity, I have around $180. Gets back to 175, 183-ish, between that $8 spread right there. That's where you start accumulating as a long play if it flushes directly into that. And again, you got the 200, which is going to continue to inch up. Good pivot. There's a gap fill right here, pivot high right there. That's a very nice level on that stock. Priceline, where would you be a buyer as a swing trade on Priceline? Very simple. This high right here, take a look. This high here, this low here, which is also right around the 200. That's a great area. If you could get a price entry on that as a swing trade, that is a golden level. So there's some good levels, but right now some of these stocks aren't into them, and it's interesting because you'll see me as when the markets are at their all-time highs and stocks like Priceline and Netflix and Tesla are at all-time highs, I'm always eager to short them and make money on them, and I usually do. And then when they stocks like this fall, then all of a sudden I start licking my chops and think about the options for buying them. And, I'm never one to wait till someone else buys first. I want to be the first one in the door because that means my entry price is better than everyone else's. And that means my profits are better. And as long as you can read the charts, you can easily profit for life. I mean, it just really doesn't take a genius. All right. Stocks in motion today. Goldman Sachs and JPM both higher. JPM here today. This is the daily chart on JPM. You can see we're still hovering above. See this former pivot high? Notice how you broke up, then you came back into that area, and now you're bouncing back off of it. So JPM is staying pretty strong. If we look at Goldman, Goldman's chart is a lot weaker than JPM's overall on the daily, but Goldman is still having a bounce today. Nice little bounce here. Notice this little pivot low area right here where you bottomed out. Now, one thing I will say about Goldman, the price action on Goldman tells me that eventually Goldman is going to go lower. All right, you can just see how weak. Here's a higher high and then a lower high, and now you're hammering on this area. Once you retrace, maybe you get up here to these moving averages, but on your next sell, you're going to wipe out these lows based on how many times you hit, and this stock will go significantly lower. The next price point, I would say, would be probably somewhere in this vicinity right here. This will be your next dip into this area, and then after that, you're going to look for this area down here. All right, right down in here. So spot 1, spot 2, once you get your next sell point on this stock. Other stocks out there, take a look at Baidu. Baidu is having a small bounce today, about a $1.79 bounce. But even this, I mean, this to me is a very minor bounce on Baidu, which is the Chinese kind of Google of China, if you will. And just by looking at the chart here, look at this. So the stock is down from basically $200, went down to about 145, 140. That's a monstrous 25% decline in a matter of 2-3 weeks. And then today's the bounce. I mean, look at that. You're getting a $1.67 out of it on the bounce side. Very poor performance. Now, percentage-wise, it's kind of in line with what the Nasdaq's up. But again, this stock fell much more than the Nasdaq did. Obviously, the Nasdaq's not down 20-25%. So it declined quicker than the market. And now on the bounce, the Nasdaq's bouncing. You'd expect this, if it was equal to the market, to be outperforming on a bounce, and it's not. It's actually right in line, which shows relative weakness. So again, this isn't a short here because you have a bottoming tail right here, and it's bouncing up. But I would say this gets up into this range. See this little pivot low here, these moving averages. Somewhere in the 170, 165 range, it starts to get very interesting as a shorting opportunity for their next leg to the downside. All right, taking a look at a couple stocks out there, or a couple ETFs in terms of commodities. The GLD continues to come lower, which makes me think the GLD is going to come into this area right here. This is probably your next spot. I thought the GLD would actually bounce off this necktie here, and it really didn't get much of a bounce there before it's declined. I actually am a bull on gold right now in the short term. Long term, I still think it's going to go lower, but in the short term, it is oversold to a point where I do think it will go higher. It just needs that catalyst. You need to wake up one morning to, potential stimulus in Europe, which they're talking about stimulus in China. They're talking about some sort of catalyst for people to think, oh, more money printing, here we go, and then the gold chart should rally up pretty significantly and has a good chance on this. I mean, based on this up move and this retrace, your next up move could actually take out this pivot high in the short term, which would be a pretty significant move to the upside. All right. One of the driving forces behind today, based on what the media is saying, is Janet Yellen made some comments in a speech today. She did it this morning, and she basically was about as dovish as could be. Considering 2 weeks ago she came out for the Fed announcement and said, "Oh, by a year from now they'll be raising interest rates." She basically did a 180-degree rotation. She came out today and said, oh, the jobs market's weak, the Fed's going to be here forever, blah, 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 blah. Very dovish talk, which obviously has helped the markets move up, thinking that the Federal Reserve will be here. Now, my guess is she just had to say that because she didn't like the reaction the market gave when she said those previous comments. But again, these Fed officials are all the same. I mean, they're all going to BS the market to get the right reaction. They want the market to stay up because it makes people wealthier, creates the wealth effect, creates spending, which helps the economy. The last thing the Fed wants is the markets to really collapse, which ultimately will happen in a mega sense. Just go listen to my Jim Rogers interview from yesterday, which I had on the radio, on my radio show. And again, you can find that on YouTube. You can find it on our website. But I talked to Jim Rogers, and he said the same thing. He said, listen, listen, these Fed officials are creating bubble after bubble. They created the tech bubble. They created the '07 financial bubble that collapsed, and they're creating another one. Each one's becoming bigger and bigger, and that's what I've said for ages myself. And it's pretty obvious because when you flood the market with liquidity like the Fed does, you're obviously going to have bubbles appear in various ways, like in the market being up 150% off of the 2009 lows. So interesting stuff there. But in any case, let's just take a look at a couple other charts here. JJC is the copper ETF. Copper down a little bit, but had a good bounce last week. Silver today is getting, well, really silver's weak, down 4 cents, but basically, I guess, flat on the day for the most part, while gold is down a little bit as well. And the USO, which is oil, down about 2 cents on the day. I do have a potential shorting level on oil up here, but it had to get there today for me to initiate that short. So I'm going to stay on the sidelines for now and kind of ignore it until we see something better. In terms of other stocks out there, we're still seeing, again, as I said, the dividend payers leading the charge. The Dow is not far away from an all-time high now. I think less than 100 points. And again, you could just chalk that up to money flow coming out of tech and going into the Dow stocks. That will end at some point in the not too distant future, so be aware of that. But at least for now, the Dow stocks are the ones that are outperforming as rotation of capital continues. All right, guys, I'm going to get going. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. More trade alerts coming. In fact, I'm going to put out a couple this afternoon based on what I'm seeing here, and I'm going to initiate some new positions that should be some good winners in the coming days. Take care.